There we go. All right. Welcome, everybody. Thank you for joining me. This is the first episode of the Degen Roundtable, where we are going to talk about something that all of us here love, which is cryptocurrency. And we are going to be talking about the current market and the variables that are currently affecting the market as a whole. So whether that's politics, whether it's national or economic events, we're going to talk about all of this here. Now, I do want to put a disclaimer out there, guys, that everything that we talk about here on this podcast is not financial advice. This is our own subjective interpretations of the chart and what is happening both nationally and internationally. Once again, this is our own subjective interpretation of these events and what that might do to the price of crypto. So please do not take any of this as financial advice. As always, make sure that you do not trust, that you verify the information that we might say on this podcast so that you are going to be able to make moves on your own with all of the information that you might have. So without further ado, I am one of your hosts. My name is Jay. I have been in the cryptocurrency space for about a year now. I got in because I started a business a few years ago, two actually. And as I was accumulating a little bit more capital, I really got tired of seeing that money just sit in the bank and do absolutely nothing. And so luckily, I was watching a show, which a lot of the guys here are familiar with, Fresh and Fit. And on that show, two guys who are my mentors, and our mentors shared by a lot of the other guys here on the show, Charlie and Miguel of Cultivate Crypto and Dollar Cost Crypto, they were talking about cryptocurrencies. And they presented that to me in such a way that made it really attractive, right? That the barrier of entry was really low for cryptocurrency and that the potential for gains was also really high. And so I took a chance and I have been in 4 of their courses, including the most recent ones, and I have had nothing but great experience within this space. And just being a year into cryptocurrency, I can personally say for myself that this is definitely the space that you can make life-changing wealth. Um, and so after a year of doing that, I got together with the guys that you see here in front of you because we wanted to share our knowledge and our experiences within the space to kind of help others navigate this market a little bit easier. Because I think I can speak for everyone here that when we all first started, the learning curve was fairly steep, and any bit of help that came our way was greatly appreciated. And so this is one of the goals of our podcast, right? Is to not only give you the news that's going on within the space and how that's affecting the price, we also want to educate you guys in a way, we want to be able to give you information in a way that's concise and that's easily absorbable, that's actionable for you, that you can use today. And so that's me. I'm going to go ahead and pass it on over to my buddy Josh, one of our founding members. Go ahead, Josh.
All right, man. Hey, guys, I appreciate it. Excited to be a part of the group. Excited to be a part of the conversation. I'm Josh. You guys can find me on Twitter at Chocolate Taints. Yeah, man, just excited to be a part of the group. I love TA. I love all the aspects of really diving into technical analysis. I'm a very analytical person. Been in the crypto space for about a year and a half now. Definitely not a beginner, but always room for growth. Always room for growth. So yeah, I'm excited to be part of this. Over the last couple weeks and couple months that we've been talking, definitely found it a lot of fun to be able to foster different relationships with you guys. So definitely excited about the opportunity. Let's get this thing rocking and rolling, and yeah, let's get some good information to each other and out into the ether as a whole.
Sounds good. I'm actually glad, Josh, that you mentioned that you have a specialty in technical analysis. I actually also lean very heavily towards technical analysis. And what you will find here on this podcast, for those of you guys who are listening, that A lot of us here are going to have different specialties. Me and Josh might lean heavily towards TA, but some of our other members here are going to lean heavily into fundamental analysis, and some might even lean towards on-chain analysis. And so one of the reasons why we formed this group in the first place is we know that we have our strengths and that we also have our weaknesses, right? But unfortunately, we have a finite amount of time during the day in order to be able to research different projects and just overall what's going on within the space, right? We don't have an infinite amount of time to spend on this. And so what we do is we get together as a group, right? And we share the information with each other. And so we cover as many bases as we possibly can, right? We cover each other's blind spots. And so I'm really glad that you mentioned that, Josh, because that's probably one of the best things that I can say about this group is that we bring a lot of different aspects to the table that that basically allow us to cover as many bases as possible and also cover each other's blind spots. So thanks for mentioning that. Let me throw it over to our next presenter, or I guess we're all co-hosts here. Nate. Nate, introduce yourself, buddy.
Hey, how's it going? My name's Nate. Yeah, so I've been in crypto technically for about 3 years. Didn't learn shit though until this it was probably about 6-8 months ago, quite frankly. I have had the unfortunate experience of being one of the exit liquidity normies for a long time. I actually first heard about crypto and Bitcoin in 2017, and it was like all I heard about it was like fuck the government. I'm like, yeah, let's go do it. And then I couldn't figure out how to like buy some, so missed that boat. However, then I started getting into other stuff, right? And every single time it was like it's pumping, it's pumping, it's pumping. Yeah, here we go. And yeah, I bought at the top at all times, and I originally put in approximately what was it like $10,000 all into it, working hard every single day. And by the time this last fall came around, I was at zero with it and just kind of giving up on it, going the route of quite literally just starting a business. But then all of a sudden I was like, you know what? I'm going to give this one more try. The Citadel came out. Let's go into it. And I got in, and next thing I know, people are spitting so much knowledge and everything. And I'm like, oh my gosh, there's way too much here. And I got overwhelmed. I got hardcore overwhelmed, but with the way that I've always been, it's like, you know what, fuck it. Nose of the grindstone, let's go. And I just kept working at it. Next thing I know, it's becoming February, like, 4 months into it and everything. And I understood the basic concepts, but now I'm getting deeper into it. And all of a sudden, I'm starting to, hey, help these new guys. Oh, what about this? What about that? And I'm helping them. And before I knew it, it's like, oh, now I'm actually kind of batting with the with the more experienced guys. What's happening here? Well, it's because I literally nonstop was trying to work hard, and I'm already working 6 days a week, 10 hours a day, right? I do it anyways. I just keep going, just keep going, just keep going. And yeah, so that's kind of me. What I'm hoping here is that a lot of the normies are going to watch us, learn a bunch of things, end up not getting scared about certain things, right? And then, yeah, hey, we're going to teach you some pretty crazy stuff.
Yeah, Nate, from what you told us there, it from the things that you talk about in the chat, right? Nate is one of our resident experts when it comes to well, I wouldn't necessarily call it degenerate, but yield farming in general and creating money printers, especially when it comes to the ICOSA and Hedron ecosystems. You wouldn't think that he's somebody who could really crash and burn in the beginning, but that's a very common experience for a lot of folks within the cryptocurrency space, right? You have to learn some of these lessons the hard way, right? We're gonna help you kind of navigate the space in such a way so you make the least amount of mistakes as possible, and hopefully not make those mistakes that really rug you, like it does for some people. But there's a quote that I like that goes something along the lines of the most valuable lessons in life are almost always going to leave a scar. And I guarantee you, being in this space, you're going to get some scars. But we're here to kind of help you out to minimize the amount of scars that you're going to get throughout that journey. So thank you for that, Nate. Up next, let's throw it over to my good buddy Brendan.
Thanks, Jay. As you said, my name is Brendan. I've been in the crypto space since early 2021. very interesting time because we were on an uptrend in a bull market, a very, very heavy bull market. And my friend said, hey, I'm investing in crypto. The first time I ever heard about Bitcoin was in 2012. 2012. And one of my friends said, hey, just Bitcoin, you should throw $100 in. You could make a lot of money. I said, well, what is it? Teach me about it. And he taught me what he knew, which wasn't very much at the time. And I said, well, I don't understand what this is. It doesn't make sense that you can just have something that's worth dollars based on an algorithm in a computer. So I was an unbeliever when I first heard about crypto, and no one could truly explain to me what it was. And I could have invested in Bitcoin in the hundreds and less than $100, but I didn't feel comfortable knowing enough about it. So fast forward to 2021, and I had already been researching a bit, and I finally get into the space, and we get a bull run, right? Straight to the top. So I invested a lot of money in a short period of time. And then when Bitcoin hit all-time highs, I smoked a cigar and I opened a very expensive bottle of whiskey. And what happened after that? I didn't take a lot of profits. I thought it was going to keep going up. I hadn't really done a lot of research. I hadn't done a lot of learning on how to be self-sufficient in the crypto space. And so I just watched my earnings die, free fall for the next year. I didn't sell. I didn't buy back in. I was just like, oh, it's going to go back up. It's going to go back up. I bought crypto. I'm good. What that taught me was that I need to be self-sufficient. I need to learn how to understand the market and the charts and the crypto space in general, that I can understand what coins I want to invest in, that I want to think that, okay, maybe I'm losing money in the short term, but I trust this project in the long term. I understand the people that are building it. I understand what their goal is. I understand what the value is that they're trying to bring to the economic space or the technological space or the gaming space within this industry. And so, yeah, I crashed and burned. I lost a lot of money early on, but it made me not cynical. It made me work hard. And this is where I came across the DCC and the CCC, Cultivate Crypto courses, as Jaded. And I've been in them for on and off for 2 years now. And what they taught me is that I have to take responsibility for my wealth and for my long-term goals. And that changed my entire outlook. It changed my entire way that I view crypto. And I'm very lucky that, sure, you lose money in the short term, but it didn't make me cynical or upset. It just made me want to work harder. And I'll tell you this, knowledge isn't necessarily a barrier to make money or not make money. What's going to make you money is hard work. In this space, if you work hard, if you learn, if you see who you can trust to the point where then you can make your own decisions, you're going to be good in the long run. Sure, short term sometimes might be challenging, but when you have a good plan, you don't worry anymore. I'm very excited for the future. I'm very happy to be part of this podcast. I've learned a lot from the guys here. Personally, I feel like I'm a bit well-rounded. I feel like I have a little bit of knowledge about all of the different on-chain data, technical analysis, deep dive into projects, research, and hard work is the name of the game. So I'm happy to be here. Thank you for having me.
Yeah, for sure, Brendan. It's funny. One of the things that you said there that really stood out to me, bro, that you made a mistake that most people probably don't think is a mistake, right? You were riding the high of the bull market in 2021, and you just didn't take profits. Like, you didn't know how to or when to take profits, right? A lot of people are thinking that's probably not necessarily a mistake. But the thing about this space is, what you're going to learn is that there are certain indicators both on the charts and as a sentiment read by how people in the market are speaking or feeling that is going to tell you as an investor when to actually exit a position. And so that's that's just like one of those things that, you know, we want to be able to share with you guys here on this podcast, is to be able to catch those times when to enter and exit the position, whether you're looking at the charts, whether you're trying to get a sentiment read from how the market is reacting emotionally. Um, and then so that you don't make the mistakes like Brendan did and not cash out a $69,000 Bitcoin, you know. But hey, he's got one of those scars, right? He's got one of those stripes on his belt. So
No doubt. Jay, I
uh,
want to add one. I want to add one more to that. I want to add one more thing to that. It, you know, you either learn from it and you move on. But again, it's the small things that matter. You say, okay, I have a lot of money, but you have no money unless you take profits, right? You have to understand that if you make a mistake and you make a bad trade, you have to know when to liquidate that trade. You know, you need to know when to pivot and change your game plan based on the market. You're never always going to be right. So you always have to understand that, hey, I was wrong and I need to move to a different place. I need to change what my thought process was because the market's dictating a different position than what I thought it was going to originally.
What are you talking about? I'm always right. Come on now.
for sure. Okay. Let's go ahead and throw it over to the next guy, Mr. Will Stevenson. How you doing, Will? Tell the people who you are, what you do, how you got into the space.
Aloha, my name is Will. I used to be a Bitcoin maxi, believe it or not. I got into crypto roundabouts 2020, and the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up to the top. Never pulled any sort of liquidity when the prices were good, and then it started crashing down, and life problems happened, so I had to exit, and that was really embarrassing. But anyways, that's essentially my backstory into crypto. Ever since that point, I started paying less attention to crypto and more attention to finance, like Jay had mentioned earlier. I was watching a lot of Fresh and Fit, the Money Mondays especially, and then I saw DCC and Charlie as well, and they attracted me to the crypto mindset course, and from there I learned about Hex and Icosa and Hedron and Chainlink and Gala and Illuvium and all these other different crypto and what their function is and their use case and why Bitcoin's really not just the only thing that fucking matters. So my focus for this podcast is going to be mostly sticking to the utilities and the use cases of Icosa and Hedron in both the Pulse chain and the Ethereum networks. That is going to be my area of expertise. And that's all I got. Back to you, Jay.
Thank you, Will. You know, one of the things that I noticed during your intro there is that you and Brendan had a very similar experience, right? You both didn't sell at the top of the market. Brendan didn't sell. You unfortunately had to sell, but the common denominator is you didn't let that experience bully you out of the market, and you didn't let that experience kind of disillusion you to the amount of wealth and gains that you could possibly make within this environment, right? Because I think all of us here are a firm believer in that cryptocurrency is the next frontier, right? And I would go as to say as it is the final frontier when it comes to finance, right? There is, I don't think, at least in our lifetime, there's ever going to be another financial avenue that can make the amount of returns for your investment, not just your money, but your time investment. There is no other financial avenue that is going to exist that is going to allow us to make the amount of returns that cryptocurrency is going to allow us. So I'm glad that you're still with us here, brother, and are able to contribute to this podcast. So,
Hell yeah.
yeah. All right, let's go and throw it over to Malik at Pickle Yard. What's up, brother? Thanks for being here. Tell us who you are, what you do, how you got into crypto, and what you hope to accomplish with our little podcast here.
Hi, good to be here. Thank you for having me. My name's Malik, or Dark here, founder of Pickle Yard, the Sovereign Brotherhood. It's a not officially open yet, but it's going to be a basically gaming guild that helps take people who know nothing about crypto and it incorporates them into gaming, art, NFTs, and web development, as well as Solidity contract auditing as well. And just trying to get people up to speed because I've noticed there's kind of a lack of concentrated information that's kind of free and public to people. And I kind of find an issue with that because there's so much information and there's so much money to be made in this industry and so many different ways that we can use it to help other people and improve people's lives to kind of circumvent some of the difficulties that we see nowadays, like with, for instance, what we might talk about later in this episode, BlackRock and the WEF. It kind of helps us deal with some of the contingencies that they might impose upon us. So I really want to educate people on that and try to get them up to speed. That way we can be ready when the hammer comes down and we can be like, hey, we're not going to accept this. We're more educated people. We've got our financial freedom. We've got our self-sovereignty. We're not going to take it anymore. And that's really what America stood for in the first place. What I'm doing right now, content creation, as well as building up the brand of the guild. Focusing mainly on AI right now, just because it's just booming and I've always wanted to be in AI. I really love it. And I'm trying to incorporate that into the crypto atmosphere and build technology that incorporates AI in a way that can help people faster and easier and cheaper than what we currently have with all the big behemoths that charge you an arm and a leg just to get in. That's basically it.
Yeah, thank you for that, brother. One of the things that you mentioned that really stood out to me there is that, one of your goals is to help people navigate the space because you see that there's so much information out there that it could be overloading for folks. And you can imagine, right? We're creating a cryptocurrency podcast, and for us, it might seem like there's a lot of people with this kind of information that's already being produced, right? But you got to realize that very little people actually know anything about this space. And so you could imagine, like, we exist in this microcosm, and we already think that there's way too much information out there for people to kind of like consume. That's like reasonable, right? For them that they'll be able to absorb and understand in a short period of time, or even like a year's worth of time. Right? Imagine what happens when this space blows up to like more than, like, let's just say like 10-20% of the population, right? When this space becomes even more saturated. So I think what we're doing here, being like presenting this information in a way that's clear and concise, it's actionable, I think is going to help a lot of people, because I guarantee you, when I first started, I wish there was something like this that was available out there for me to consume, right? Where it's like they're talking about all the different things that I was interested in, right? All in one space. It kind of helps decrease the amount of labor and legwork that I have to do, when researching out there in the YouTube area. So that's a good point there, brother. Let's go ahead and throw it over to our good buddy Jeff.
Hey, what's up, guys? I was trying to hurry up and change my profile pic to that picture of Channing Tatum when he says, "My name's Jeff," but I couldn't figure it out. So anyway, I got in this space November 21. My brother talked me into it. He had bought some Ethereum, so I went that route. Then I bought some Cardano, then Bitcoin, like the general pie chart that everybody starts out with the beginning. And then I kind of just spent the next 3 months every day at work, earphones in, researching because I'm very, very inquisitive. So honestly, it was fun for me. So then after about 3 months, my buddy calls me up, crazy. Funny enough, he has no idea I'm even into crypto. He's like, "Hey, they got this coin that's launching." I'm like, "Okay, it's probably a scam, whatever." He's like, "Dude, I'm telling you, this guy's sharp. He's really good with money." And usually what he says is like Bible talk. So he's like, "Well, tell me about it." And it was Pulse X. I was like, "Okay, I'll sure. You know what? I trust you. I'll throw some money in it." And I hit up the sacrifice. And then he didn't even mention Hex. So then I kind of after like a month, I'm like, well, what the hell is Pulse? Actually, I started diving into it and just, kind of reading about it, researching about it. And then all of a sudden, that's when I stumbled upon Richard Hart. And at first, probably as most people are, was a little skeptical. So after doing more research and being open-minded and just hearing the amount of intelligence this dude had, and essentially him being right on just about every fucking thing that comes out of his mouth. So I'm like, okay, this is the ecosystem I'm going to be a part of. So then I literally stopped listening to Cardano bullshit, stopped listening to Bitcoin, and just literally just tried to focus on this ecosystem so I could dive into it and see if it was actually the opportunity my buddy was telling me it was, or if it was bullshit. So regardless, we don't need to make this long, but honestly, I do this because I enjoy it. I know everybody's, oh, I'm in for the tech, and they say bullshit, you're in for the money. Let's go with I'm 90% in for the money and 10% for the tech because it's fun. I really do enjoy it. I like hanging out with y'all. I like looking at the charts, even though I can't really read them that well. It's just a cool little learning experience. But yeah, that's all I really got to say. I don't want to drag it out too long.
No, brother. I mean, you made a really good point there. I think when you hear people in this space say that I'm in it for the tech, I think to some degree there is a kernel of truth to what they say. But at the end of the day, all of us here are in this space because we want to make a ton of money, right? And it's it is arguably the space that you're going to make the most amount of money for the most for your capital and for your time invested, right? And there's absolutely no other avenue that I personally see that is going to be able to allow us to make the number of X's uh, the same way that being in cryptocurrency is going to allow us, right? So, and to be quite honest, like you said, right, this space is fun, right? If I was going to pick a space to make money in, I'm going to pick this space where there's a lot of fucking fun. I know people joke about the NFTs and the JPEGs and all this digital land and being able to like make money playing video games on Web3, and people poke fun of that. But I'm thinking to myself, look, if I can make money doing those things, and for me personally, I think that they're a ton of fun, then I'm going to pick that avenue. Why the hell would I pick an avenue of finance that I can make money in, but it's boring as fuck? Right? I mean, personally, I don't want to do that. I don't know about anybody else, but personally, I don't want to do that. I'm gonna pick the space to have the most fun in. And personally, I see cryptocurrency space as that space. Like, I'm having a ton of fun in here, despite the fact that we just got through a extremely harsh bear market. Right? A lot. It's funny. I was talking to some guys a few months back, right? And we were talking about all of the different black swans last year. And one guy made a comment that's like, is it really a black swan if there was one after every like 3 months? And that got me thinking, I'm like, yeah, but it was just that bad, right? You had black swan after black swan after black swan last year, right? Luna, Celsius, Three Arrows, FTX, the Golden Boy, Sam Bankman-Fried. We thought he was the best of us, but he was actually Satan. He was the betrayer.
Essentially,
Yeah, yeah. But hey, you mentioned TA. Why don't we? I think that's everybody, right? We got through all the introductions. If anybody else, we have a couple guys that might come on a little bit later that will introduce you if they have the opportunity to. But let's move on. Whenever we do this podcast, guys, we're gonna do a little bit of a market update for you when it comes to the technical analysis, the charts. Me and Josh and our other buddy Dace will help you through that, and then we're going to talk about some of the fundamental events that are going on within this space, whether nationally or internationally, or even just locally, that might affect which direction the market wants to head. And so did we get through everybody, Josh? Yeah. Okay, cool. Let me go ahead and share my screen with you guys here so that we can go through a little bit of a market update. Give me 1 second. All right. Let me know if you guys can see that.
Yeah, you're good. We got it.
Cool. Alrighty. We are currently on day number 39 of the current cycle. We had a high here on day 17, 28,500 just about. And then our current cycle low is right here on day 34. Now, what happened on Thursday is actually something that we're going to be talking about here a little while. BlackRock announced that they are pursuing a spot Bitcoin ETF. Now, this actually gave the market a little bit of a much needed tailwind, right? Because Thursday we had that green candle after the announcement, and it's done pretty well so far over this weekend, right? Because Bitcoin last week, despite the fact that traditional markets, everything within the traditional markets was basically gaining significant momentum, like they were in their bull run, or at the very least, the start of their bull run, crypto was pretty much depressed to a degree, right? Because of what was happening with the SEC and their lawsuits that they are pursuing against Coinbase and against Binance. So despite the fact that the rest of the markets were gaining this upside momentum, cryptocurrency, our market was pretty much depressed. So this announcement by BlackRock actually gave us a little bit of a tailwind because, look, I guarantee you, if we didn't get any sort of positive news, I think Bitcoin would have probably closed weekly, right? And we would have actually had a good chance of breaking the current support that held, and we would have probably gone down to like around 24K. So here's the thing. I think personally, from what I'm seeing in the chart and what's happening within the news, next week is going to be a very important week for Bitcoin, right? I'm right here in the daily chart, and if you guys can see here, Bitcoin has regained the 20 on the daily, right? It's teetering the 20-day moving average though, right? And so it has to reclaim the 20-day moving average, and then more importantly, right, if you take a fib retracement from our swing high here to the swing low, you notice that the 382 level is right there on 27,200. Right? If you notice, that also lines up with, just a second here. If you notice, it's also that 27,200 number also lines up with this area of resistance right here, right? Bitcoin tried to hold this as support, but it collapsed down, and now it's going to become resistance, right? And so next week, if Bitcoin can regain that 27,200, 100, 200 level, I think it has a very good chance of actually, it's a good chance that our current cycle is actually over, and we're starting in a new cycle. And it's actually a good argument. Some people were arguing that the current 60-day cycle actually started here on Monday, April 24th, and that we ended here on June 15th, which was on Thursday, right? Because that's when we got that low. And that would be 52 days within the cycle. So if Bitcoin can regain that 27,200 level, that's actually a good argument against the alternate cycle theory that some people are arguing for, right? Because that would make 52 days. And then if we can regain that level, then we could argue for a new cycle starting, right? And so we can look towards that the hot boy summer that we've been talking about for a while now. So that's the bullish scenario, right? Let's just hope that we get a little bit more bullish news over the next week, because as you can see, like the news from BlackRock is kind of starting to wind down, and the buying volume is starting to decrease, right? Because as you know, that was just an announcement from BlackRock. It's going to take a significant amount of time before the SEC even approves that, if they are going to approve it. And so we're going to need a little bit more juice to be pumped into this market for us to recover that. Because if you see here, that's a lot of resistance, right? That's a lot of resistance that Bitcoin has to get through for us to like really start rocking it up to the upside. Now, if we don't get any more bullish news, right, Bitcoin can do one of two things, right? It could just crab along this downward sloping trend line here. But we have a lot of support around that area, right? Bitcoin held the support around the 25,000 area. Historically speaking, when we see these cycle highs here, that's going to serve as very strong support. Bitcoin is also using the short-term green trend line here, this green sloping trend line. It used that as support. And also, here's a few important things that I noticed that some of you guys might find interesting. If you take a retracement from our bear market lows here, and you pull it all the way to the swing high, if you notice, that 382 level lines up perfectly with that 25,000 level. So there's that first fill level there. Now, if we take that same retracement and take it from this swing low, that lines up perfectly with the 0.5 fib level. Now, the 0.5 fib level is not a true Fibonacci level, right? But 50% retracement, it's a psychological level for people, right? When they see oh wow, I'm getting a 50% discount in prices, I'm gonna buy in. That's another reason why I think there was so much higher buy volume around this area, because that's also a psychological level, right? So we have a ton of different, we have a confluence of different variables on the chart telling us that this area of 2,500 is going to serve as strong support. If we do lose it though, if we do somehow lose it, we're probably, I wouldn't be surprised if Bitcoin came down all the way down here to around the 21,500 area. But that's close enough to Bitcoin's realized price that I think, you know, this area right here is such a great value area that I don't think I don't see this price lasting. I think it's going to get bought up super quickly. And I know some people might be panicking because, oh, look at that, we're in a downtrend, right? We've been having downwards prices for the last almost 2 months now, but that's only looking at it if you're looking at it from the daily, right? If you notice here from this long-term trend line right here, right? Unless we break this long-term trend line here, we are still in an uptrend, right? This is still a strong uptrend. If we go to the weekly chart, it's even clearer here, right? That uptrend is even clearer, right? Because you eliminate a lot of that noise on the daily. On the weekly chart, it's even a lot clearer to see that we are still in an uptrend. Unless Bitcoin breaks this green trend line here, then I'm Gucci, right? We're still in an uptrend, and unless the price says otherwise, we're still good to go. Still bullish for 2024, 2025. I don't think we're going back down to anywhere close to bear market lows personally, but let the price tell us what it wants to do, right?
My God,
that's it
all
for
of
the
that
market update.
hopium
If anybody has any comments on that, please go ahead.
Yeah, no, you're giving me lots of hopium, man. It's like we're not going to zero. We're actually going up. What?
Yeah, for sure. So Jay came in with like a parent with the good news. I'm gonna show my chart real quick and maybe take an alternate look. Maybe look at the short term, the short term trend and what we're looking at, and what might not necessarily be so bullish. Can everyone see my screen here? We good to go? Cool. All right. So yeah, we have a pretty defined channel that we have here that's been rolling down. Given the new, and of course we're going to cover this, tonight, but given the lukewarm comments from Jay Powell following the FOMC meeting, there was some decent information, and we'll cover this later. There was some decent information, but there was also some information that's like, okay, well, this isn't very good, but it's not very bad. So I don't necessarily know if there's enough sentiment in the market to send Bitcoin up right now. As you had said, the Blackrock EFT, that information is starting to fade a little bit. That excitement. We did come up here to the upper part of the trend line, as we can see. So right now, off the swing high, or the local high, if we bring the price down, we see that it's dipped down about 19%. Typically, a healthy Bitcoin retracement will be 25 to 30%, and that's why I have it lined up here. you know, that 0.5 fib level that you mentioned, I think that'll be a good psychological barrier. Plus it's down here at the bottom of the trend line. So as we're coming into the 60-day cycle, you know, that's definitely some bullish information that Jay put out. But as far as on the short term, I don't necessarily know if we have enough that'll send it back up very strong. You know, if sentiment stays how it is, then, you know, what is going to be the line of least resistance? It's going to be just a continued down cycle. So as it sits now, you know, it's very possible that all this, you know, that we could punch through this this channel that we have right here, and we could start going to the moon. But as it sits right now, I think maybe retracing down to this 0.5 level, which lines up with some decent levels of support here. That would also be about a 30% retracement from the high. So, you know, 25% would be around, well, yeah, it'd be right around the 25% level. So yeah, it could be 25%, or it could even come down here to, like you said, that $21,000 level. That would be a 31% decline. So yeah, I definitely still think we have a little bit more red. We're definitely, you know, macro, of course, the lows are in, you know, from here we're going up. There's no question about that. It's just as far as the immediate, the immediacy, I mean, we're not punching up. I wouldn't say I doubt we're going to be punching up within the next couple of weeks. It'll probably continue to slump a little bit, but hey, it's buying opportunities, right? You know, we're going to buy those red candles, and over the next couple of weeks, you know, Bitcoin is going to lead the market. So everything else that comes around is going to be in a great buying opportunity. And
Yeah, totally agree with you
what I
there.
got.
Yeah, totally agree with you there, brother. I am also of the opinion that unless we get significant bullish news next week, that there's no way that we're going to be able to carry this momentum, right? Because the only reason that we even had this positive 3-4 day candle that's green is because of the Blackrock news. If you notice, the rest of the financial markets are in they're starting in their bull run, right? It's like good news after good news after good news for them. Usually, right? At least in the beginning of the year, right? We had we had this coupling, right, with traditional finance, where if the markets were positive, if traditional markets were positive, we'd also start it would carry us along with it, right? But over the past few weeks, if you guys notice, been decoupled, right? Despite all the bullishness of the S&P, our markets have been going down. And so, like you said, right, if unless we get any more significant bullish news next week, I don't see this momentum like snowballing into something bigger. But who knows, right? Markets open tomorrow, so we'll see what happens, right? I mean, you know, like I thought that we were going to close this week red, and then BlackRock comes down with the news with the ETF, and then, you know, we have some hope for recovery. So who knows, right? All right, so after the market, that's it for the market update. Let's move on to one of the topics that we wanted to cover today, which is the BlackRock announcing their spot Bitcoin ETF, right? They're hopefully that'll get approved by the SEC, but we'll see, right? Because Gary has not exactly been friendly towards any other company that has proposed a spot Bitcoin ETF in the past. Now, there are like a Grayscale Bitcoin. I believe it's a futures, right? It's a futures ETF for Bitcoin. If somebody can explain to our viewers the difference between the spot ETF that Bitcoin is trying to that BlackRock is trying to get approved now versus a futures Bitcoin ETF that exists in other markets, just so that people can understand what the differences between those two are and why the market is so bullish about it. Anybody can jump on and take that.
Hey Jay, this is a Tracker. I can take that. Can you guys hear me?
Go ahead, Tracker.
All right, cool, man. All right, so the bluff is, or the bottom line really is that a futures ETF, no new surprise here. Fidelity, Grayscale, everyone's been trying to get ETFs. All they can get is basically futures ETF. That's just paper. That means that they can trade futures, They don't necessarily have to have the coins on their books necessarily. Thus, it's the futures market. So they don't actually have to hold the coins on their actual balance sheets. Now, with a spot ETF, which has never been approved yet in the United States, a couple have popped up, I think a few in Canada, some in Singapore, some in other locations. But in the United States, they will not allow they will not allow a spot ETF, because once they do that, that's going to now ensure that there'll be a big buying opportunity in traditional markets for the actual crypto. If there's anybody who's going to get one first, it's definitely going to be BlackRock. BlackRock, owned by Larry Fink, the CEO guru. They control $9 to $10 trillion worldwide in assets. And if you're not sure who they are, look it up. They probably own your 401k in some aspects. They own all pension funds in the United States. They control everything you can imagine. So with that group, they will be able to buy future. They will be able to get this approved, no problem. And most likely, without a doubt, if anybody's going to get it approved first for spot ETF, it will be BlackRock. So I kind of feel like with them coming on, they are going to set the timeline on when an actual spot ETF will occur by the SEC and by the US government. They'll let them go first. Now, the question is, when will that spot ETF come out? A lot of us have talked about it. Once that spot ETF comes out, ultimately, that might be the top in the overall market. So you don't really want this to come out right away. The fact that they're coming in, yes, it was good news for the markets last week, but it's something that's going to take some time to play out. Because once again, futures, no big surprise there. Once that does get approved, then the time clock is on. When will the SEC allow them to allow the spot ETF? Now, there's other things we can talk about, like USDC, Fed now, and all this other stuff we can talk about later. But just specifically, that's really the difference. I know I went kind of a little long on that, but to kind of give you a little bit of a background around it, who they are, what's going on, and why they are going to get approved over anybody else, because they are an extension of the U.S. government.
Yeah. Okay. So actually, before we get any further into the BlackRock discussion, Tracker, if you could give us a little bit of an intro to who you are, so the audience just does like who's the guy that just jumped in talking about the BlackRock issue, and then we don't know who
iPhone
he
guy.
is. Can you give us? Yeah, iPhone. Yeah. Can you give us a little bit of an intro about who you are, what you do, how you got into crypto, and what you want to accomplish with this podcast in particular?
Yeah, sure. Been in the development industry for about 20 plus years. Computer science, minor computer engineering. I've always loved technology, so I'm pretty much in this. Truly do love the technology. I know this is it evolving in this direction. Got sucked into probably well, before then I was been doing traditional markets for 20 years or so. Kind of also got exposed to a lot of the macro stuff. Not to get into some of the conspiracy and degen type stuff, but I say September 11th was definitely an eye-opening experience. So I've been following macros and how the world works and operates, really. It's probably since then. Got into crypto around Q1 of 2021. So I haven't been in too long, but I pretty much been drinking and breathing it probably since that time, nonstop, probably spending on average anywhere between 5 to 6 hours a day in between me working. It's definitely an eye-opening experience. DCC, Charlie from Cultivate Crypto and all, they definitely got me exposed, as well as others in the Hex ecosystem and other streamers online. So just kind of figuring out who's who, but you start to see a trend, you start to hearing about more. And once you understand what they're guiding you, it starts to expose you to diving in deeper into like exactly what is crypto, what is the encryption process of crypto, like why is it, it's just really understanding the technology, not just buying coins and all, but really the technology, and why is it such a solid technology, and you understand the DeFi aspects and how it's open transactions, and it's there's so much to cover here, but basically I was involved in the technology, got exposed to it, and then now trying to meeting up with you guys, having like minds to try to understand and navigate through this, because it's, yes, you can do it on your own, but man, it is 10 times easier by having a group of people like this that you can work together with to take on a lot of stuff. Because when you get into crypto, it's not just, oh, I'm in crypto. Okay, cool. What area of crypto are you in? Are you in the technology side? Are you in the security side? Are you into DeFi? Are you into decentralized? Are you into GameFi? You know, like what's your niche? Where are you getting into? Because to say you're in all of it, it's almost impossible. So my background is basically that. I've been exposed to a lot of traditional markets, been in technology for a long time, and now I'm just trying to really expose myself to everything in the industry. In my job, I've been doing the database and ETL development for a long time. I'm moving more into the operational on-prem and cloud infrastructure, DevOps, pipelines, you know, CI/CD type stuff. It's continuous integration, continuous development, understanding and basically how to, you know, organize teams to develop at a very high, fast pace, you know, quick delivery, quick to market. And then with that being introduced now to AI, I'm very, I know Malik's already been diving into that, but really want to dive into understanding more about the AI aspect and how to leverage that as a tool. Also, I guess my big takeaway for this stream is not, I guess the biggest aspect for this stream is not to worry about necessarily what our plays are that we're looking at and we're trying to do, but trying to just empower people with the knowledge and tools that are out there and understanding how to navigate through the industry so that they can be empowered to be free thinkers and understand, you know, how to formulate their own theories and their own hypothesis of how they're going to navigate through this to basically capitalize the most for themselves. Like you can't just get there and just think you're going to be spoon fed what to do. You got to learn how to navigate, and there's a lot to take in. So I guess that's really the biggest takeaway, is empowering everybody who's listening.
Gotcha. Thanks for that. Thanks for that, Tracker. For you guys who are very interested in the GameFi space, Tracker has actually been the one who's been giving us a ton of different alpha when it comes to GameFi. So when we do an episode specific for GameFi, look forward to it, because he's definitely going to have a lot of things to share with you guys that'll help you navigate that space in particular a lot better. So, hey, before we move forward, I see some of the guys in the chat. It is Josh, can you see them raising their hand? Oh, there we go. I can see it now. Nate, the hand in your background was like almost so clear that I could not see it. So Nate actually wants to comment on the BlackRock ETF announcement. Nate, go ahead, brother.
Yeah, just a comment off of the raising of the hand. Basically, like, I'm all Irish and or Scandinavian, so I'm basically clear to begin with. So it's all good. All right, so yeah, looking into this ETF, it's actually a huge deal, right? So kind of what's going on with it, right, is simply that there has already been a lot of ETFs that have been, well, they've been trying to get it moving, and so far crypto is 0 and 75 when it comes to getting any ETF out. So yeah, we're pulling we're just always losing, you know. We're like the Detroit Lions over here. So basically what's happening is this is really kind of an amazing thing happening, because BlackRock itself is now coming out with, hey, we want to do the spot ETF. Spot specifically, right? Not futures, nothing like that, right? Spot's going to be the big deal. The big deal is simply because this is actually going to allow people to actually own the coins themselves, right? Based on BlackRock buying it. So the cool thing about that is, and this is what blew my mind when I was looking at this, is that we got these giants over here. We have the greatest loser of all time when it comes to ETFs, and then we got the greatest winner of all time going at it, right? We have BlackRock with a score of 575 times getting what they want from the SEC, and then only one time have they ever not gotten it. And then we have our loser over here had 0 and 75, right? Which I think is that kind of a weird number that they both ended at 75. I had to like double, triple check that. I was like, there's no way, but maybe, I don't know, maybe it's the robot at BlackRock. Anyways, now with that being said, I can almost guarantee that this is what the SEC has been waiting for. They've been waiting for BlackRock to come in and be like, we want to be the first. Hilariously enough, looking back into the history of things, BlackRock is actually Larry Fink, right? Is the guy who actually created the idea of using spot ETFs to completely revolutionize how the trading market actually worked. Every single time there is some sort of spot ETF created, there's a huge pump. To give you an example of something that's ridiculous, gold. When the first ever spot ETF was created for gold 10x. 10x. Gold. How on earth do you do that? So now imagine what on earth is going to happen with crypto. Oh boy. We're about to get going. So this is going to be crazy. Here's the one thing I do worry about is that BlackRock is a little bit early comparative to the halvening. So here's what I'm kind of expecting. Okay. Basically, it's usually within, what is it, about 45 days that BlackRock can get approved. Remember, they only filed. Okay, this is a filing, so it's a hype moment, right? It's not legit right now. They're just trying to make it legit. So keep that in mind, all right? However, if they file, it's usually within about 45 days, right? We have the halvening coming in, what is it, March of next year. March of next year, if they file now, okay, June, and then they get it right around, say, September, October, we are too early. Things start pumping incorrectly, right? Especially with the pivot needing to come up. Now, and we're going to get into this later as well, but with the Fed pivot coming, for 100 plus years of the markets, right? It's always been, yeah, then we get a major crash afterwards. Okay, so you can expect that. More than likely, you can expect it. I think what's going on here is that BlackRock is putting all their ducks in a row. They're putting all their ducks in a row. People will forget, oh yeah, they did file for that way back when, right? Okay. They're not going to fire it off until after the pivot. And just like how I've been looking at for the past year now, we're going to be getting, you know, a very quick, like, small little pump, which is going to come from the Fed, right? Gary Gensler, sorry, wrong. Jerome Powell, right? But Gary Gensler is going to end up getting fired, and then what's going to end up happening is that the BlackRock is then, after we get the pivot and then crash, then from there, right? That's when we start pumping. Gary Gensler is fired. We got a new guy in. He's working probably for BlackRock, and things are going to explode. Now, my worry about this is obviously, is this going to be the last year for extreme pumps on crypto until we move over to a traditional route? I don't know about that, but it is what it is. We can speculate on that later. However, for now, this is a big deal, but it's just a hype moment. So everybody calm down. I think they're not going to do anything with it. They're going to get approved, but then they're not going to do anything with it until later. So yeah, I'm pretty sure that that's what's going to end up happening. Tracker, you basically said everything else that I was going to say. I completely 100% agree with you on that. The one worry and the one thing that we really need to watch out for on this spot ETF with BlackRock is them legitimately releasing it too early. I don't think they're going to do that, but there's a possibility. And if they do release it too early, we're going to struggle in crypto over here.
Yeah, those are some good points, Nate. Like the gold thing, I actually completely forgot. So for the people at home that might not might still a little bit hazy on why the market is so bullish with BlackRock, is that number one, not only is this, like Tracker said, right? They are the company that holds probably the largest amount of assets in the world, right? $10 trillion worth in assets, BlackRock. And so you have brand recognition when it comes to BlackRock, right? And so they're a big name within traditional finance. And so if they get approved for this spot Bitcoin ETF, a lot of the people who are fairly conservative, right? They don't really want to involve themselves in cryptocurrency because they still see it as a high risk on asset. They're going to say, oh, well, BlackRock now has a spot Bitcoin ETF. I know them within the industry. They're successful. They are a household name. And so I am now more comfortable investing some money into Bitcoin, right? And from what everybody's saying, right, being able to invest in a spot ETF, it streamlines the process to a degree, right? Because you don't have to sign on to an exchange, you don't have to sign on, you don't have to custody in a wallet or anything like that. Now, obviously, with us within the crypto space, we think it's kind of antithetical to the spirit of crypto, right? Like, what do you mean? Like, you're gonna have a different entity handle your money, or like you're not gonna self custody it, right? To us, it's antithetical, but you got to realize that when it comes to like more like the average Joe and Jane just investing in the market, they see that as a safer option, right? So that's why a lot of people are bullish on this news, is because a lot of the people who are a little bit more reserved when it comes to investing in cryptocurrency are going to see this, right, as like, okay, that's a household name, like Apple, like Microsoft, I can, like Tesla, I can put money in them. And then next is like what Nate said, like, guys, if you look back at the history of what happened with gold when the first gold ETF was allowed on the market, right? That shot up the price of gold 10x, right? So, and you can go back and see exactly what happened there. So that's one of the primary reasons why people are so bullish in this news in the first place. So yeah, good takes on that, guys.
Yeah, and
I
I'd like
know
to add on to that
Malik.
as well, actually. So
Yeah,
we-
go
you
ahead,
are
go
one,
ahead.
you're 100% correct about that. This is retirement boomer money, okay? This is literally the money that is going to be the wealth transfer coming in now, okay? Very important to understand that the wealth transfer money is coming in now through BlackRock, right? One thing that also people need to start thinking about is the fact that spot ETFs, especially through BlackRock, are going to be competitors now to any exchange. Okay. So what kind of strange that we have the SEC. What are they doing to a certain Binance Coinbase and all that, right? Like what are they doing right now with them? Interesting, right? Okay, so I'll just leave that as is. Go ahead to your imagination. I don't know anything. But yeah, so it's very interesting how this is all working. So that's all I got to say on that.
Well, I'll
One
jump
hell
in
of a
here.
coincidence.
Hold on. I'll jump in there and say it. Screw it. All right. So it's pretty interesting how
This guy.
yeah, I got to push this one a little bit. Sorry. So it's pretty interesting if you see what's happening here. Let's look at the facts. What's been laid out for us? The SEC has been blocking Grayscale, Fidelity.
I
Hell,
kind of wanted to
Fidelity.
go into that a little bit as well.
Yeah. Yeah. Fidelity. Let's just look at Fidelity. Fidelity, they are the stock market, right? Fidelity is a massive company, tons of pull. They have already allowed you to start owning crypto and already starting to allow to, within a brokerage account, buying and trading, just like a central exchange. They are becoming a central exchange. Fidelity. You have Grayscale, tons of futures ETFs. They have all different types of combination of baskets. They're probably got the best products out there for traditional markets exposure to crypto. And yet they keep filing, they keep getting rejected with no plausible explanation. So it's very clear the SEC is blocking anybody from getting anything to move forward to allow them, oh, what's coming around the corner in July? Oh, it's Fed Now. Fed Now. So now comes Fed Now in July. That's going to be, whether you believe it or not, it's going to be the predecessor to CBDCs, which will come out shortly after. The creator of the actual sub-chain network Avalanche, which I think it's called, I forgot the name of the actual network they're calling it, but it's a sub-network of Avalanche who created it for FedNow. Even the creators have said it's going to be the predecessor of CBDCs. So facts is it's going to be the CBDCs. Once they have CBDCs in place, and on top of this, BlackRock getting their foothold into the traditional markets, that's going to lay the groundwork now for the powers that be to get their footprints and their controls into place before they basically let off the brake to allow everybody else to come into the market. So that's basically what's unfolding here. I'm sure there's many here want to add to that. So that's all I got.
Yeah, Malik, I know Malik, you wanted to add to the conversation with BlackRock. So go ahead, brother. Yeah, let us know what you think about the whole situation.
It's kind of just to add on to basically what everybody's been saying, but to add what they've themselves said. The WEF just published their white paper entitled Pathways to Crypto Asset Regulation. And so they're literally telling us this is what we plan to do for crypto. They're giving us the game plan. So basically, what they want to do is their main goals are launching a digital assets lab run by Goldman Sachs technology alumni, partnering with Coinbase to connect large clients of BlackRock's Aladdin platform with access to crypto, starting with Bitcoin, launching a private trust to provide Bitcoin exposure to institutional clients in the US, exploring capital market applications for USDC, a stablecoin issued by Circle, which is also pretty much connected with Coinbase as well. So as you can see, the SEC might be saying one thing, but the people at the top that control everything are saying another thing. They're saying, no, we're going to push crypto whether you like it or not. And we're going to keep our baby Coinbase and USDC alive because that's their runway for their CBDCs. They're going to use that to incorporate that into basically what I see them doing is using USDC as kind of the new US dollar for the rest of the world. And then using their CBDC as, you know, the next thing that they come out with, right? Because BlackRock isn't the US government, so there is a little bit of tension there, right? They don't, the politicians don't want Coinbase to have access to the bank's financial system. They don't want Circle to have access to that, which is why they've been denied from their proposals, right? So there's going to be contention, which is why BlackRock is now going over, okay, you don't want to let us do it in the US, we'll do it over in the EU, we'll do it in the Davos group, right? With all the rest of the investors, right? We'll control everyone else then. And so by definition, it's going to come. And they're already talking about getting their Bitcoin exposure to institutional clients, which that would be the Bitcoin ETF. So when you're looking at what they're saying, when you're looking at what their intentions are and what they're doing, because they're doing this as they're saying it, right? They're literally laying out the groundwork for what they're going to be doing for the next 5 to 10 years. That's why the year 2030 keeps coming up in all these articles and all these headlines and news media and all that, right? It's 2030 is their goal to do all this, right? Well, basically they're going to start ramping this stuff up, right? They want to put the people that they want that are going to implement this into power, and they're going to fund those organizations. So when you really look at to what the market is doing and how, you know, the Fed might be acting and how, you know, the government might act, you have to kind of take into effect, okay, where are the commands coming from, right? Where are the directions they're going? Because everybody's concerned about their ESG scores. And if you take a look at the WEF jobs report, they tell you all the factors that they're going to be pushing until 2030. So you can see all of the sectors that are going to be downsides. You can see all of the sectors that they are going to start cutting back on and start pushing people down under their thumb into the have-nots. Because what they're really trying to do is remove the middle class entirely. And they're just trying to have the lower class and the upper class. And basically you work and you make it, it'll be like a dystopian Soviet Russia, really, with technology. And there'll be like a really good book that kind of puts it into perspective. I can't remember the name of it, but another one is 1984 by George Orwell. That's another good one. It's not Sovereign Individual. It might be Sovereign Individual. Is another good one as well. But that was pretty much all I had to say on that.
Hey, Alik and Pickyard, I appreciate that information. Do you mind if I connect some of the dots there from some of the things you said, just so for people can understand
Yeah.
kind of how it is? So, all right, so he was telling you guys about the WEF. All right, well, let's go up the tier and see who's at the head of the tier. It's the BIS, Bank of International Settlements. They control 98% of the world GDP. That's 98%. They basically control everything in the world. Now, they have think tanks, the WEF and the Club of Rome, and they've got other ones. They are their think tanks to decide what they want to do. He mentioned Davos. Davos is where they meet in Switzerland once every year. It used to be very secretive. Now it's very in the open. It's on CNBC News, where they'll tell you how they're meeting, and they turn this little ski town into this massive, they'll come in there, build out all these buildings and make it a big deal now. But it used to be very closed, and they used to call it was something else. I forgot what it was. Bilderberg, I think, is what it was called. But George Soros is the one who created it. It's his little, brainchild. Anyhow, they meet every year. They talk about all these things. They bring all the world leaders and they talk here at Davos. So that's what's going on. This is when all the news. He talked about the World Jobs Report and all this information that came out. They're the ones that are putting it out there. They are not shy about it. They're telling everybody exactly what they're doing. You probably heard of something called the Great Reset. Hell, it was on, I believe, 2 years ago on Time Magazine, October edition magazine. They had a whole magazine dedicated to the Great Reset. They've done two with Time Magazine and media. So they're telling you exactly what they're going to do. They're not shying away from this. Now, why do we care about the BIS if you live in the US or other places? Well, the BIS has charter extensions to almost every major country in the entire world. In the United States, your charter is the Federal Reserve. You are the charter to the BIS. So the Federal Reserve, you might want to go take a little look at how that was created. Basically, JP Morgan and others were involved in the creation of it. Probably heard of something called Jekyll Island, blah, blah, blah. But basically 1914 is when Federal Reserve was created. The BIS was created in 1930s. But look at who creates that and who did it. BIS is connected to the IMF, the International Monetary Fund. They're connected to others as well, but they are pretty much the ones calling the shots on all this stuff, and they're laying out the groundwork of how they want to move forward by 2030 to make in their eyes, a better world for everybody. And this is where CBDC, central bank digital currencies, the FedNow coin, and all this is going to, and then that's just US. Other places around the world are already introducing their CBDCs. So what he's saying is they're laying out the groundwork, pay attention. This is all coming. It's not going to get shy away. It's coming. So people need to start to open their eyes and be a little more self-aware. You'd be surprised. I talk to most people that I know and all, no clue. Never even heard that FedNow is even coming out, which is shocking to me since it's coming out in July. Just wanted to add some context and connect some dots for the others. Thanks, guys.
Yeah, brother. I mean, look, those are extremely good observations. I know a lot of people when they see Gary, right, and they listen to him speak, everybody thinks that this guy is extremely anti-crypto. And like you said, right, I think on the surface, he's reporting himself to be fairly anti-crypto, right? In the guise of protecting the normal people. But like you said, when you dig a little bit deeper, it seems like he's only anti-crypto until the right people get in. And if BlackRock does happen to be the first one that they approve for a spot ETF for Bitcoin, I think that's going to, the dots are so clear and obvious, it's going to be hard for you to connect them. You know what's crazy too? Here's the thing, right? Wouldn't it be funny? Wouldn't it be funny that when BlackRock gets approved for the Bitcoin ETF, they announced that Gary is now stepping down. They put somebody else in there and say, actually, it was somebody else that approved the spot ETF for Bitcoin, not Gary. So now people are not going to have any reason to link him to approving the ETF for BlackRock, because we all know that they're probably in bed together, right? So it's just, I know it's a lot of conspiracy theory shit, right? But it's really hard not to think of it as a strong possibility when you start connecting all of those different dots that both you and Malik lined out for us, right? And so again, do with that information what you will, but you know, personally, it's like when all of these coincidences start kind of converging into each other, it's hard not to make a case for it. So but with that being said, let's roll over into our other favorite guy. I actually like this guy a lot better than Gary Gensler, Mr. Jerome Powell, and the FOMC meeting that we just had last week. Everybody thinking that we were going to get a 2 more at least rate hikes, but Powell did say during this meeting that we are for sure going to get at least 2 more rate hikes. However, what a lot of people did not expect was him saying, well, the market kind of priced in that we were going to have a pause, right? What they didn't price in was JP saying during the meeting, look, we said that we are going to pause just for this meeting. We have not announced, or we have not even talked about if we are going to extend this pause towards other meetings. And so it introduced a little bit more uncertainty into the market, right, at this point, where traditionally if the Fed pauses, they hold the rate for a little while, and then we pivot. But now JP basically said, look, just during this meeting, we're going to pause. We don't know if we're going to hold it yet, but we're still definitely going to raise the rates later in the year and then maybe pivot. And so it introduced a lot more uncertainty in the market than I think what people were expecting. All right. So I wanted to get your guys' thoughts on what was said during the FOMC meeting, what you think is going to happen within the next few months, if JP is going to hold a pause, if we're going to pivot, if we're going to get those increases sooner rather than later. Let's talk about what do you guys think? Let's go over. I think Malik has his hand up here. Malik, go ahead.
Okay, so basically, yeah, I wanted to talk about the FOMC a little bit because he so I just want to give a little bit of a shout out here to Dollar Cost Crypto. He did a very good stream breaking down the FOMC meeting. I'm sure a lot of our viewers might know who he is, might have been following him for a while. If you haven't caught that stream, I would highly recommend watching it. If you know these meetings aren't really your forte and it's a little bit hard to digest, he breaks it down pretty well. But the gist of it is that meeting was basically to let all the banks know not to fucking buy into the market. Basically, it was to just let them know, hey, we're gonna hit you with more increases. Basically, what he was saying is that everybody in the Federal Reserve that's active on the duty of reducing inflation is in agreement that the ending inflation rate at the end of this year will be the ending mean inflation rate at the end of this year will be 5.6%, which is pretty close to our terminal rate. So they're really getting on that time crunch here. So people are kind of, the institutional investors and banks are kind of getting like, okay, maybe we need some time to store up some cash, kind of weather out the storm, because there's going to be another increase, 2 of them at least. And who knows, they might hold, they might do a pause, they might, who knows, they might do a pivot after, and that's really going to send the market down. So historically, every pivot has sent the market down. So what we could see here, I know we touched on this earlier, is that we could see, a little bit of crabbing right now, because nobody really has the wind in their sails to really want to invest, because the literal people printing the money for the US and the rest of the world just said, do not fucking buy. We're going to increase the rates again. Do not buy. That was the entire message of the meeting, was to institutions and to banks and to large corporations across the world that are critical to our infrastructure, our financial infrastructure, not to invest any money into the market right now, and to store up, just wait, and let us try and help print out some money, get things in order so that we can actually get inflation down. And then they gave estimates for 2024 and 2025 as well. The end of 2024 was 4.6, and the end of 2023 was 3, or 2025 was 3.4. So they are telling us, hey, we're gonna increase it, but we are gonna drop it pretty significantly and pretty quickly right after, right? So they have to tighten it more so that people kind of hold their money. They got to wash people out of the market. They got to get that money back because they overspent. Obviously, everybody's spending on credit, basically. One giant Ponzi, but we'll talk about that later. But yeah, you can see that our regulators and the corporations and everybody, they're telling us exactly what they're going to do, but you have to pay attention, because this stuff isn't nobody's talking about this stuff. Most people don't even know what any of these concepts even are. I mean, I go and I network at different events, and I'm just speaking to people that it feels like they just got into crypto, and they claim they've been there for years, and it's just you really got to do your due diligence, because this stuff, like NFT Tracker said, it's coming, and it's going to come fast. And if you don't understand what exponential growth is, I highly encourage you to learn what it is, because this stuff is probably going to happen before 2030, right? Like they're going to try and push it before 2030. 2030 is just their deadline, right? But they want everybody on the same page pushing this before them. So I'll pass it over to somebody else, but that's what I had on this.
Before we move on to Nate here, Malik, I had a quick question for you because you mentioned something that kind of piqued my curiosity there. So do you think that if it is the case that JP was not so explicitly stating to everybody not to buy into the market now, you think that this recent price pump within the market is just for these bigger players to use the smaller guys as exit liquidity in order to build up that cash reserves for later down along the line?
Yeah, so basically, I think what they're trying to do is they're kind of telling the banks like save up, like right now, wait to buy, right? Wait to sell, wait to take out your money, and let the like we're giving you a pause to give everybody time to collect money, right? If the retail investors and everybody else throws in their money, yeah, they're going to use them as extra liquidity, right? They want them to build up their capital. So obviously they're kind of trying to give them a window of time to where they can kind of let the markets kind of build up to a point where they can start dropping stuff, because they're going to drop us, but they need us. What they're scared of is the banks, right? Right now, they don't think the banks have enough money to handle another rate increase. And they kind of saw that from how much blood we just saw from them pushing out the debt deal so long. So them playing kind of games like that with the market kind of crippled it a little bit. And so what they're scared of the banks failing and having a bank run. They don't know the scale of the bank run. So that's why they're kind of trying to stall it out, buy themselves more time, and kind of give their banks more time to get their assets in order, so that obviously they're going to use this as extra liquidity, but so that they can have some kind of money so that there's not a bank run.
Okay, gotcha. No, those are actually really good points. You mentioned that the pause also served another function because they were increasing rates they increased rates at such a fast pace that there were, so if you guys are familiar, there were a few bank collapses in the beginning of the year, and there were a few other banks that are basically teetering on that collapse as well. Right. And so what Malik said actually made a lot more sense to me, because look, if they kept increasing the rates, even if it's only 25 basis points, then you push those banks, and especially even the smaller ones, like closer and closer and closer to like just kind of calling it quits and closing their doors. Right. And so I think that actually that's a really good point there, Malik, that one of the other reasons why they paused the rates was because if they kept moving it, I think at greater than 5.5% was like a cutoff point. Like a lot of these people are like, a lot of these banks are not going to make it if you raise their rates like higher, like past 5.5%. So yeah, thanks for the insight there, Malik. Some really good information there. Nate, you wanted to add something to the FOMC meeting conversation, and then I think Tracker had something to say as well.
Yeah. So actually well said, Malik. Really well said. So here's one thing I'm going to kind of argue against, right? So I think the whole pausing and telling people to save up money and all that is not necessarily, it's a part of it, but I don't think it's necessarily like, oh, we're just trying to use you guys as exit liquidity. He very specifically stated where he wants to get inflation down to, right? And able to get inflation down, you obviously cannot be printing. So to hold off the printer, you need people to save money rather than just spending money wildly. So he's telling people to stop spending money. And he's doing it in a way that's a little bit politician-like, causing people to be like, oh, maybe I shouldn't be spending my money right now. And then what ends up happening here is the numbers are going to look better on his end for the next time he comes out with a meeting. Now, that being said, right, I've got and thank you for doing the numbers, by the way. He already stated, he was going to be dropping things down 2024, 2025. I agree with you. It's kind of strange how him and the feds are being so, what's the best word for it? Visible? Right? Yeah, I wonder why. Because the banks are scaring them. the banks failing, being as weak as they are, is scaring the shit out of them. It's like if their job
because
was
all the bankers are fucking stupid.
yeah, literally, exactly it. And that's what's funny, actually. That's why for people like us, we're just watching. We're watching this with popcorn, man. We're just like, oh, and it's hilarious as hell. So yeah. So they don't want people to spend money because he wants specific numbers to come out. And so he's kind of manipulating the market himself on his own meeting, right? Now, with that being said, here's the cool thing, okay? Obviously, the question here, people are like, oh, you know, people watching us, oh, we don't really don't care. Like, you're saying numbers and things and blah, 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 but what about our bags, right? Obviously, the bags are what's important, okay? Now, let's go ahead and have a look at that, okay? Pay attention, children. Let's go. Bag pumping. Okay, so our bag should be able to pump here pretty decently because basically what we're going to end up getting is he specified, he very specifically specified, we only want to do 2 more rate hikes. There's 4 more meetings. Okay. 4 more meetings. Now, Jerome is also notorious for overshooting a little bit. So that means overshooting a little bit is going to be 3 rate hikes. That means that out of 4 meetings, we have 1 more pause, and it's not going to be the pivot. So here's what I'm predicting, right? The very next meeting is going to be a pause. He very specifically specified that that he and his colleagues want to observe what's going on in the market. So what's happening now is people saving money, not spending. Markets they're pausing. So what I think is he's warning people not to spend, aka trying to prevent it. People are going to spend money anyways, or as you said there, Malik, specifically big money, right? Big money is going to do that. Now, big money is going to be spending. Exit liquidity is not, because they believe stupid shit. So what ends up happening at that point in time, right, is that we're next meeting we get a pause, and we're getting we're getting Pumpamental Summer, baby, right? Fun stuff. This is where we grab our bags. This is where we take a little bit of profits, just a little bit, not a lot, but a little bit, right? And then from there, okay, we're gonna start raising rates a little bit, and I hope we get 2 pauses in a row. That would be insane. I wish we could have that. Truthfully, I think the most likely is pause, increase, and then what should be an expected pause is going to be another increase. Now, I'd get mad if that happened, but I hope it's at that point. But if we get that pause, that is the pivot. That's going to be the pivot. If we get an increase, then it'll be pause pivot. So that means we're not getting a pivot this year, right? Don't worry, children. Your bags aren't dropping through the floor yet this year. It's going to be next year, guys. So, but it's going to be early next year. All right. So make sure that anybody here wait for that meeting next time, okay? And if he pauses, you get yourselves ready to take some profits. You understand that? Take profits. Now, it doesn't mean sell your entire bag. No, you don't do that, bro. No. Sell like maximum, absolute maximum, like maybe 50%. And that's if you're a degen like us. We're us terrible people, right? So, with that being said, after he starts raising the rates again, people are going to panic. Well, the markets are going to go down. And we are correlated to that. Ultimately, though, he does want to get inflation down to 2%. We are currently, oh crap, I forgot the exact number. Maybe someone can go ahead and say it for me. But yeah, the numbers, thank you, Jay, 4.1 is current, right? So we literally need to cut it in half. But ultimately, he wants to get it down to 2%. That is the goal. The only way he's going to do that is by getting people not to spend, aka exit liquidity. And he just keeps raising the rates. I think next year we're gonna go ahead and get the pause and pivot, and then that's when things are gonna crash like crazy. However, crashing like crazy, okay, and this is where it actually it connects to the ETF. Okay, we've got the warning shot from BlackRock right now saying, hey, we're creating an ETF, guys. It's going to make things pump out of your out of your brains, right? And then all of a sudden it's going to disappear. And it's like, oh, do you remember the thing that happened back then? Yeah, that was a thing, wasn't it? Okay, come back to it. Bring it back in. Now suddenly with the pivot, oh, by the way, we are launching, not filing for. We have been accepted and we're launching now a Bitcoin ETF. This is going to be like maybe February or March, right around the Bitcoin halvening. So I'm not going to lie, guys, like this is going to go insane. We are like with all of these dots connecting at the same time, and you watch BlackRock, they're going to do this. They are smart. They are going to do this. We're going to get all these things within a month. Probably February is going to be the month to watch. 2024. Boom. Oh my God. We are going to fucking fly. All you're going to see is green candles for days, and we're going to be on yachts and going, what? Right? We're going to have parties, man. And that's what I see happening. Any thoughts on that?
Actually, personally, if I was BlackRock, I would learn from Michael Saylor, and I would reserve that bullet in my chamber for a time when, like, let's say the market starts climbing, slowing down. I'm like, okay, Bitcoin spot ETF gives it a little bit more momentum. And so you give yourself an opportunity to pump the price a little bit more because a lot more retail is coming in, and then you exit closer to the top, right? If you like you said, Nate, if you introduce if you shoot that bullet a little bit too soon, like around the halvening, then cool, we get a little bit of a stronger pump during the halvening, but then what else can you do to push the price up a little bit higher later down along the bull cycle, right? So it's like for me
Ethereum
personally,
ETF.
if I was BlackRock, I'd kind of hold off on that and reserve it, for a more opportune moment, as opposed to just kind of throwing it out there near the halvening, because
I
we know
think
that
this
the
is step
price is
one,
going
bro.
to go up during the halvening anyway. So, but
I think it's going to be
if
step
they were
one.
smart,
And then,
they're
I
smart.
think it's going to be step one. And then number two is they're going to do like an Ethereum ETF. And this is going to be the traditional market legitimately coming into the crypto space, which is going to be a lot of money getting in. I think this is what they're doing. They're doing it step by step, obviously, but I wouldn't be surprised if maybe in January, maybe perhaps December, we get, they're filing for also an ETH, maybe Ethereum, right? You know what I'm saying there? It's like, okay. So yeah, I think that's kind of, I don't know. Just watch. Let's watch carefully, guys.
I'm not too sure about the Ethereum thing, right? Because unless we get some significant clarity about Ethereum being not being a security, right? Because like the next topic that we're going to transition into a little bit here is actually the Hinman emails, and Gary Gensler has been explicitly stating, look, the only cryptocurrency that we do not that here in the SEC we do not consider a security is Bitcoin. That's it, right? And unless there's a significant shift in his paradigm, I think it's just going to be Bitcoin. I think Ethereum is probably going to be sometime down along the line. But Josh, I see your hand up. Did you want to say something about the FOMC meeting, brother?
Yeah. Look, Powell didn't say anything at all. It was an icy hot announcement. That's the best way to put it. I mean, you really got to look at what he said. He said growth in consumer spending has increased, but the housing sector is weak due to high mortgage rates, right? And then he says, hey, look, real GDP increased. The real GDP increase projections. In 2023, it's projected to be 1% GDP growth, and then in 2024, it's projected to be 1.1%. But there's slower output growth in business because of the fixed investments, because of the high interest rates. And then when we're talking about the labor market, he'll go in and he'll say, over the past 3 months, payroll job gains has averaged $283K per month, but unemployment has increased. And then he'll go in and he'll say, there's nominal wage growth and the jobs to workers gap has declined, but labor demand still, it still surpasses the available workers. So what is he really saying? Like, he's not really saying anything, and that's why you see what you see in the market right now. It's still, there's nothing to be super excited about at the moment, but there's nothing to be really scared about at the moment. So it's if there's any conditions at all that I could foresee happening at this point, it's going to be continued crabbing. It's going to be more question marks. And even a reporter asked, what is going to determine whether another increase is going to happen or not? And he gave an answer. I can't remember the answer that he gave, but it was a confusing answer. But because the question was, hey, are you going to look at the economy, or is it a fixed, definitely by this point we're going to be increasing it by the end of the year? And it's to me it was a big nothing burger. But I mean, that's, if anybody else has anything to say on that, but that's, that's just my take on it.
Nate, you said he had a comment on what Josh said.
Yeah, so basically, like, when he's talking about that, he's kind of warning people about the real estate market. That's and it's kind of funny because he's so slick with what he says. Like, I had to go back over 3 times. I was like, wait, there's something there. There's something there. And I literally had to repeat it 3 times. I was like, wait a minute. And yeah, so basically he's talking when you're talking about that, right? He was talking about the real estate market, how it hasn't yet crashed and it's actually still doing decent enough. However, the numbers are starting to go down. You can see the crash coming. And so he's kind of warning people about it, but he's I don't know. He's putting it in a way that only like people who watch him are gonna understand. It's kind of like he's talking to a different audience at that point. When it comes to, so what you said, what you were talking about is for like traditional markets and or affecting people, right? Especially when it comes to workers, okay? People actually working in the market. It's kind of odd how, and the thing, I think he's actually, Jerome is getting a little bit pissed off at the fact that the labor market is actually still going strong, and he's like, we're trying to destroy this, or at least try and drop it, right? And he's getting a little bit pissed off at it. It's like, let me get my numbers, damn it. So, I would say that's technically a good thing, but that's just me. Basically, though, what he was talking about there was specifically the real estate market. Crypto works a lot faster than the real estate market. So I think, I mean, they're connected in a way, yes, but I would say they're a little bit more of a separation comparative to what it is that we're specifying here today on the podcast.
Gotcha. Okay, so I think on that note, let's transition over to the last topic that we wanted to cover today in regards to the Hinman documents. So a lot of us that have been following the case with Ripple lately, it seems like what a lot of folks were expecting was when the documents from Bill Hinman were unsealed, right? The emails, that this was actually going to be the final, well, one of the final nails in the coffin for the SEC's case against XRP being a security. However, from what has been disclosed to the public, it seems like the exchange between Hinman and his compatriots within the SEC were actually pretty, like, they were in opposition, and so there were emails going back and forth between him and some of the people within the SEC saying, like, look, we know that what you want to say about Ethereum and other cryptocurrencies is that, look, a lot of them sufficiently meet the Howey test, right? And so that they're not going to be labeled as a security. However, we think, like a lot of us here think, that you are going to confuse a lot more folks in the market with that statement, because we actually think that the only currency currently that can be labeled not as a security is Bitcoin. Everything else is we still think that they're securities. And so what a lot of people were hoping was that these documents would actually benefit XRP's case. But it seems like, from the information that's been released so far, it seems like that actually might backfire on them, because it seems like now Hinman actually went ahead despite the reservations that the rest of the SEC had about other cryptocurrencies. He still went ahead with the speech saying that they're not securities. So, like, can I get your guys' thoughts on that? I don't know if Brendan is still in here, but I think he has information on that. But let me know what you guys think about those emails and about just the whole situation with the SEC and XRP case in general. Or not. Okay, I guess well, if nobody else has any anything to add on to that, I think I think we can wrap up this first episode and call it a night. Guys, did you want to add anything else to the conversation in terms of the subjects that we have covered here today before we sign off?
Yeah, I would just add on, like, anybody who's watching this, right, make sure that you're keeping your bags, right? Because we are going to have something of a pump, right? Summer, the whole summer pump and everything, we will have that. It should be for a short period of time, though. It's not going to be nearly as long as we were hoping for. Make sure you do take some profits, and then just keep pumping the bags. What's up, Mal?
Hot boy summer, baby.
Hey, that's what I'm talking
City,
about.
city boys, we up. City
We
boys, we
up.
Yeah, this you know, it's really I'm glad that we have this group. It's good that we're going to be able to bounce ideas off of each other and bring different strengths to the table. I think this is a really good group. And yeah, I'm excited about it.
And here's the thing, guys, for those of you who are going to watch this podcast or listen to it, we were already having these kinds of conversations in the first place, right? We jump on calls once or twice a week and talk about different ideas that we have, things that we observe in the chart, things that we observe in the market. We were already having these conversations in the first place. And the only thing that we decided to do was record it and share it with, the rest of the world, basically, right? Because we were hoping that we'd be able to provide some value to you guys the same way that we're providing value to each other. And so, to be quite honest with you, like, doing this podcast, it's not really for anything except just to share that information, right? Like, we're not trying to make money off of anybody. We're not trying to shill like a product or a service or anything like that. Like, maybe those things will come sometime down along the line, but for the most part, the only thing we wanted to do is share with you guys the conversations that we were already having in the first place, and to hopefully provide value to you in that way. And so, just to echo what Josh said, I'm really quite glad to have found a group of people who have a very similar mindset, right? We have very similar like worldviews, life paths, morals, ethics, etc. And we're really all about creating as much wealth as possible. And to be quite honest with you, it's very difficult to find people around you who have that kind of mindset, right? Because for the most part, I think most people are fine with their day-to-day lives. They say they want to get rich, they want to get wealthy, they want self-sovereignty, they want that kind of freedom. but a lot of it is just talk, and not a lot of people are willing to do the work. And so being able to find a group of guys who are actually about it, right, and who are executing on their plans, it's like that opportunity doesn't come along your way every single day. So I'm really glad to have this group of guys with me, to be able to share this journey, and just to be able to share with the rest of you out there who might be watching. So yeah, if
Hey
I'll give
Jay,
everybody
Jay,
some,
what are some things that you think we could cover over the next couple weeks? Or Will, Nate, what do you guys think? Some pretty cool stuff. What can we expect to cover over the next couple episodes? What do you guys think?
Well, first off, I'd like to go ahead and like say, yeah, no, I completely agree with you guys. Like, this group is really good. This is the type of group where everyone is able, like, hey, I got a question about this. Somebody's gonna know something. It's amazing. We got the nerd Jay over here who's like looking at those charts, being like, holy crap, look at all this stuff. And I'm like, huh? And I'm not good at TA, but I look, the fundamental analysis, and I can see things. I'm like, okay, I'm seeing what's going on over here. And then Jay's like, oh wow, how'd you get that? It's like, we work so well together. It's absolutely amazing. So here's the thing, like, this is only the first episode. We just wanted to cover a few things that's kind of going on, especially with like the Fed and all that. But like, I think next week we got something of like pulse chain and all that, kind of like stories and things that we were doing and things that are coming up. Am I correct about that there, Jay?
yeah, man. Look, I'm gonna be honest with the audience right now. We are not Hex maxis. We're not Richard Hart maxis, but we do like the Hex ecosystem, right? If there's one thing that our mentors taught us during our time in this space, is that we are coin agnostic. We are going to invest in coins if it's going to make us a lot of money. Okay, we're not gonna care who the founder is. We're not gonna care what you think about the coin. We're not gonna care if you think it's a scam. What we do is we do our own research, right? We do our due diligence, and we don't take anybody's word for gospel. And so, yes, we will be talking about Hex. We will be talking about Pulse Chain. We will be talking about Richard Hart projects, because his projects has made a lot of us, a lot of money. And so, look forward to that next week. We're going to be talking about Pulse Chain, the Hex ecosystem, maybe some of the derivative coins within that ecosystem. Like Will said, he's very big on ICOSA and Hedron. And yeah, we'll go over those things next week. So look forward to it, because we certainly are going to be looking forward to it. So with that,
Hell yeah.
yes, sir. With that, thank you for joining us. We know that time is your most valuable asset, and we do appreciate that you spend a little bit of that time here with us. Until next time, take care, guys. Peace.